Welcome to another episode of Leverage Addicts, and today we have a very special guest, Cameron Stewart, one of New Zealand's top property traders, over 300 transactions in his resume, our proud father, and he is a very experienced investor.
And we love him so much. He came and spoke at our company event a couple of weeks ago, and everybody really enjoyed it. So we've got him back here today to talk property and mortgages and life, and welcome.
Thanks, man. Good to be here. It's always good to share the knowledge that's been obtained over a 15-year career, and if it can add value to someone else, it's always a good thing, isn't it?
Well, I feel like you've crammed 50 to 100 years of property knowledge into the last 15 years, and the thing I admire about you, Cameron, is you're not afraid to take action, whether you know the whole journey of what you're undertaking or not. You learn enough to take the next step, and you take the next step. And I feel like what a lot of people, especially in the property investing game, get into the habit of is over-researching, over-analyzing, talking themselves out of good deals because of finding a good reason not to do something. Whereas you find good enough, from my point of view, good enough reasons to do something, understand the risks, but in most cases push forward.
Yeah, well, you've got to have a go. I mean, at the end of the day, they don't always work out the way you want them to work out. But, the best way that you learn is by doing. A lot of theory-based education is, like books and podcasts and all these things are great. But unless we go and apply it to something, you don't actually really learn process. I mean, that's how I learn is through doing.
Yeah.
And so some people have a different learning style, but for me, it's like I have to do to learn.
Yeah.
So I have to fail forward. I have to fail and make mistakes to actually learn the skills that are required to progress, where some people just are real petrified of making the mistakes. Well, the reality is if you want to succeed at anything, you've got to make the mistakes.
Yeah. So trying to get through as much as we can today. Going back to some of your stories from the other day, you had a colourful few years as a teenager, growing up through school, and ended up shifting to Aussie, a couple of different jobs there. And during that time, you saved up your money, you took your uncle's advice, correct me if I'm wrong, bought some properties in Invercargill when you were young, early 20s, and then you had an injury, and that kind of set you on a path of reevaluating how, one, you're going to spend your life, and two, how you're going to make money. And that kind of led you to some books and then some mentors. What do you tell us about that stage?
When I was working my own business as a livestock agent, and I was forced into that actually because of when I had my injury in 2006. When I came back to New Zealand in 2007, I couldn't get a job. So I was kind of forced into self-employed business. So I was doing the livestock agent thing in the King Country, which was really the training ground for going into
sales negotiation.
Yeah, and because it was just brutal, like pulling up people's driveways. Hey man, I'm the Cameron Stewart, I'm the new agent in there. Wearing a salmon pink Elders top. It was quite embarrassing, to be honest with you. But I think that was like part of the pathway that set me up for when I came to Auckland, when I did Sean Wood's property tutors course in 2009. I kind of probably had a lot more mental resilience than a lot of the other guys that did that course because of what I'd just come from. It was quite a good transition.
Well, you've come through an injury. You come through an upbringing where you got to just make your own wins. It's not given to you. And then you've spent money to be in this course, and you want to learn from the guy that has already been having success. And the way you told the story, I was quite, had to chuckle, is you really made sure you got your money's worth from that paid mentorship to make sure that you got a lot of one-on-one time and asked them those questions. And
I hounded them. A lot of other people, it's like when I paid this guy 25,000 plus GST, there was a lot of money in 2009 when you think about it. I mean, that's probably equivalent to 50 grand today.
Especially at the time of GFC.
Yeah, it was a lot of money. And so I thought, bugger it, I'm paying this guy this money, I'm going to get my money's worth. And so that was kind of, honestly, it's not rocket science. It's like all you do in life, all I've done is gone and found people who are better than me and just copied what they did.
Yeah, I'm the same. Before I got into a position to start this business, I started with a blank sheet of paper and I started researching certain industries. I paid, it was about $6,000 US to do an online course. It was a lot of money for me. It forces you to commit yourself because you realize, well, I've just spent a big chunk of the only money I have. I've told my parents and my friends and my family what I'm up to, and if I don't follow through, then I am a failure. So it's good sometimes to jump deep. It was something heavy and swim, right?
And you sort of wonder how you did it. sometimes along the way, it's like, man, why did I put myself under so much pressure? Like, why am I doing this? But, if you look at all of the ups and downs, there's more ups and downs. But sometimes when you're in the downs, it's like,
Yeah.
you can't see over the top of the rise.
So that kind of got you on the journey. How many trades or property deals had you done before you did the Sean Woods?
None. I bought 3 houses in Invercargill, and I can't remember exactly if I had bought the other 2. I ended up having 5. I have a feeling I may have had 5 properties in Invercargill at that time that I bought just as residential investments. But I didn't know what the hell I was doing. I was just kind of just...
Yeah, I mean, you bought where you knew. You're from Invercargill. You bought around that area.
And to be fair, those houses didn't go up significantly in value through the time of holding them, but they might have gone up 50 grand a pop.
What was the cash flow like?
You were getting like 9%, gross yields, and so you're getting 250, 280 bucks a week, and you're buying these houses for 150,000 type of thing.
Yeah.
But those houses today, they're worth 450,000.
Yeah.
So it's all relevant, eh?
You did this this course and you got on this property trading journey. What was this trigger that you did your first deal or first 10 deals? Explain to us why you decided, look, I'm not going to buy a 6th property and hold it. I'm going to trade lots of properties to make money from property investing.
Well, I never planned on being a property trader. I actually just wanted to learn how to invest and create a passive income so that I could go and live my life. I mean, I was naive. I was in my early 20s, and I thought that I was just going to go and build a portfolio and go and drink pina coladas or drink beers on the beach somewhere. I didn't expect that it was a different mentality. I suppose what happened was the first property trade I did, which was 91 Great South Road in Manurewa, I remember it clearly. It's this old villa. I made 50 or 60 grand in the first deal.
And what was the time frame for that roughly?
It was like 8 weeks.
It's like cocaine, right?
Yeah, so
it feels good.
Yeah, it was just like
big win.
It was like, man, I just did it was hard work because you're ripping it apart and doing that, but it was like, that was a lot of money. 50 grand was a lot of money in 2009.
Yeah, tax free.
Yeah, that was a lot of money, and I'm thinking to myself, like, I'm going to get rich.
Did you have to pay tax on that first one?
Yeah, I had to set it all up in a company. When I started with the course, I got set up with an accountancy firm, and they set up all the structures. So I was, claim the GST, pay the GST.
Yeah, fair enough.
From day one, I was set up for that structure, and then I had my hold company. So I had my hold entity, and I had a trading entity. So I did have all of that, but it was still a lot of money, man. It was probably net 35 grand or something.
So you probably figured, all right, just did this one across 2 months. I can do 6 a year easily. How can I do 10? How can I do 20? And then you just...
Or just escalate it. Because once you start the process of it, and this has been my biggest issue over my career, like I've gone and said, I'll take a little bit of a break. And then I start doing it. When you start doing it, it's just a process of deals come. So if you're going to do 1, you might as well do 20. If you're going to do 20, you might as well do 30. If you're going to do 30...
You start building a team around you, and you hit the next scale of having help. And I guess what you're good at is finding the deal.
That's exactly, I would just like the hunt.
So tell us, the hunt involves relationships with lots of real estate agents. I'm guessing you've built a lot of relationships. Some of them are purely professional, but I'm sure a lot of them are quite, there's good rapport and friendship with some of these agents. How many agents have you worked with over the years on more than one transaction?
25 plus.
You've basically got this deep reservoir of people that help you achieve wealth, and you only ever have to engage with them or pay them on success, right?
Yeah.
So you basically got like 25 people on commission working for you.
Effectively, they just become like, a lot of those guys who I started, when, they were selling relatively new to real estate as I was, I've watched so many of them, like Adam Thompson, for example. When I met Adam, who owns Ray White Manukau, he was just an agent doing a thing. Now he's got one of the biggest Ray White offices in Auckland. I mean, I've watched that guy rise from where he was to where he is now. So a lot of the guys that I was working with, it's been awesome because you see people, their career lift as your career's lifted. It's been cool to watch the progression because we were all young.
So how does that conversation start? So it's you pick up the phone, you call an agent, you say, I'm looking for a certain property or a certain type of properties, or you say, hey, I've seen you've listed this property. Can we have a chat about it?
I took a different sort of approach. I always kind of just caught up with people and had a coffee. I wasn't always everyone's cup of tea, because with these personality clashes to every person, like some of us get on with different personas and so on. So my thing was always going to try and find an agent that I could be friends with.
And you only need a few key suburbs or key areas that.
Yeah, and so built the relationship with those guys, built a friendship, and then had a few beers or whatever, and kind of one thing led to another over a period of time. But some of those guys, like I had a friendship with for like 2 years before I even bought one deal, and I think that's probably a key thing too. A lot of the younger guys coming into the game, it's like they're sort of rip, shit, and bust. It's like they just want to get in and do a deal, and they don't really give a stuff who they sort of affect in the process. Like they go out, lowballing the crap out of offers, and they just annoy people.
Time wasting. What the agent just deems it as time wasting, and they don't.
Especially with this uneducated offers.
So wrong clauses or
huge DD periods and all of that sort of stuff that goes with it, which just really sort of rubs people up the wrong way.
Yeah, well, what I've deemed over our conversations is one of your key strategies is one, you are prepared to have very short due diligence periods and to go unconditional quickly, which works in the favor of the agent and the vendor. And the way that you're able to do that is you've built up your equity pocket.
Yeah.
And your knowledge that you're able to quickly assess whether a deal's worth doing. And the whole outcome of all of that is you're able to buy properties at the price that's right for you,
Well, if a deal's a deal, so if a deal's a deal, it doesn't matter. Like if I'm going to buy it or someone else is going to buy it, I just need to secure it.
So if it went to market as a public listing instead of pre-market, or if it's been on the market for a week, but you're able to buy it today or in a couple of days, that property might sell for 50, 100 or even 200 or 300 grand more. But what the vendor in that time is looking for a quick cash deal, and that's...
Yeah, there's always a willing seller and there's always a willing buyer. People get all sort of cut up and worked up about, you're doing the wrong thing. But I've gone and bought houses like the guy, there's been a guy, for example, that needed to move to like Germany the next day.
Yeah, sure. So
it's like crazy things like that.
The agent called you and said, hey, I've got this one that needs to sell today.
It needs to sell today. It needs to go unconditional today. He's had a serious family situation arise. He's leaving New Zealand and he's not coming back. He's selling the house with everything in it. He wants a cash unconditional offer today. And I just went in and bought the house, and it was ridiculously cheap. It was like hundreds of thousands of dollars below market value.
So when you frame the context of that, it's like, would you build relationships with agents and do coffees and have beers and on the premise that hopefully somebody's going to call you with a deal like that? And not only are they going to call you, you actually have to be ready on the day to close, right?
Yeah, you've got to be there to do the deal. If people stop. I mean, like right now at this point in time, like at this phase of my career, like I haven't been like super aggressive in the market, and so the phone stopped ringing. But as soon as I stop, as I start, activating more, my phone rings again.
So how many agents would you call if you wanted to do 10 deals in the next 3 months?
I just consistently ring 5 or 6 agents a day, every day, and that's just what I do. And I do that anyway. I've always kind of keep that relationship.
It might just be 2 or 3 minute calls. It might be half an hour, I'm guessing.
Yeah, sometimes I might put a post up on Instagram or whatever, and someone might view it, and it'll remind me about them, so I'll ring them. Or if I'm driving along the motorway, an agent comes in my mind, I ring them. And that's just kind of what I've always just done. I do that with friends too, by the way. I think it's an important thing to do, to keep in touch with people,
So navigating these market conditions, what have you done in the past considering fast changes in markets, and what are you doing now?
Well, I've been super conservative of late, and it's probably, look, there's other people in the market that are at an earlier stage of their career that have probably been more aggressive at this point, but I don't want to lose any more money, so I lost some money last year, which is fine, and that's part of the game.
Well, you said you'd done 330 deals, you lost money on 11 or something.
11, and 4 of them were last year. And so I thought I was pretty good.
Change of market,
massive increase in material costs, unstable finance.
Some non-bank lending.
Yeah, just all pretty painful. And that we're sort of really not out of the woods yet. So I kind of...
So for context, for some people that they don't have the insight on the finance side of things for property trading or flipping, generally speaking, banks don't want to do property trade deals because the banks make money when they finance properties over a long period of time, and they have lower rates, so they make less and they don't really have fees attached for it. So if you told a bank you wanted to buy a property and sell it in 3 months, generally speaking, speaking, they're not going to be very, very interested. So what that means is property traders, flippers, professional investors, they often have to use non-bank lenders or second, third tier finance, especially when you've done as many deals as you have. It's very hard to hide the fact what you're doing. So finance comes from a different place.
Yeah, well, I've done a lot of joint venture stuff. So I've had how I've done a lot of deals, and volume was through having partners come in and fund the deals with cash.
Are they 50-50 deals?
50-50, yeah. So that's how I've done a lot of volume. But I've also done a lot of when I started, the banks funded a lot of it. Like you could get bank funding, and then around 2017-ish, they started getting they really started hating on property speculators, like, traders and stuff. And it just started becoming really difficult. So I just transitioned my whole model from my own personal trades, to just all joint venture in developing a consultation type income. And so but the second tier lenders like the Base Corps and these types of guys, we've had a great relationship with those guys.
Well, those lenders are specifically set up to help property investors for flipping, trading. That's the deals they want to do. Yeah. They charge fees, application fees, refinance fees. They charge slightly higher interest rates. That's what they want.
Oh, and they're great. And they're like I've got a great relationship with Craig at Base Corp, and he'll just fund them. Yeah. Like he'll be like, oh, Cam's doing that deal, and he'll look over it and he'll go, yeah, I'll fund that deal, because he knows we execute.
Yeah. So there's like a little business plan on the deal basically when you submit it, or they green light it based on that.
Yeah. Well, I have a spreadsheet. So every deal that I have, so when I'm doing my DD and stuff, I go through and I look at all, go through and do a full costing schedule. I've got a whole spreadsheet, shows the profit and loss, all of the different things on there. So it's pretty easy to realize. But even with all of that, and like last year we had those losses, and I consider myself to be pretty good at what I do, and I had some losses. So I think for the people that are listening to this, it's important to take action, but it's important to take educated action. Do you understand the market that you're working in?
Well, and that's what you've updated your mindset around doing deals that have big margins, right? Yeah. There's no point in doing 100 deals that have $10,000 profit margins. It's better to do 20 deals that have 50 or 100,000 margin, right? Or even more.
Look, honestly though too, like it really depends, Andrew, on I know guys in the market that are doing massive volume, like huge, ridiculous volume, but tiny margin. But it just depends on how hard you want to work.
Yeah, and the thing is,
just way too hard.
They might have a big team that's doing a lot of the grunty work, and it's more like a streamlined, just production line of renovation, basically.
Yeah.
But I guess they're pinching pennies on every single little thing because of the margins being so much smaller.
Well, even those deals that I lost money on last year, they were big margin deals and I still lost money. So the guys that were running off small margin would have got a beating.
Yeah.
Yeah, and they did. I heard of all sorts of stories out there.
So let's talk about some of the notable deals and projects that you're proud of and what you've learned from them, and then we can go into some risks or challenges you're looking at.
Oh God,
you must have some deals you're proud of that you're not worried about.
To be honest, I've been some of the proudest. The deals that I've executed are the ones that went the most pear-shaped. Like I did a deal with friends of mine in Tarawera Terrace 48, and it was a big reclad, massive reclad, and I had 4 or 5 big reclad projects on at this moment in time, and my builder ran off and ripped me off about $1 million over those projects and left me in a world of strife. And we managed to go through and actually complete these projects and rectify them and sell them.
Yeah,
didn't lose money.
I'm sure the market helped there.
Yeah, the market helped a little bit. Luckily it didn't drop, but the point that these things went completely pear-shaped. There was no paperwork trail, and so those projects, it was 112 Taylor Road in Blockhouse Bay, or Taylor Street in Blockhouse Bay, 48B Tarawera Terrace in St Heliers, 15 Waite Avenue in Mount Roskill, and there was one more, it might have been Ada, which we've only just rectified a few months ago. They're just really major problematic projects, and once you go and finish jobs like that, you can pretty much finish anything.
Yeah. I suppose you're
talking millions, over those 4 projects, you're talking, $4 or $5 million in renovation costs.
Yeah.
This is not small.
Over a long period of time as well, isn't it?
Yeah, over 12, 18, 24 months. So
Yeah, and I think a lot of people that are hesitant to talk in a positive way about property trading, maybe some people that feel like property investing or property trading is quite capitalist, that it's not fair to, like, maybe everybody should own a home and nobody should own two. Those kind of political people, is to say, no, property traders don't add value, they just speculate, they make money off other people. And when you step back, and what you really see is what property traders are doing is adding value to the market, because they're helping people get away from the problems they don't want. And so in some of the scenarios, people don't want to do a $500,000 renovation, they want to sell the property and somebody else to do it. And some people need to sell urgently, some people need to sell because of divorce, or they can't keep up with their debts. And so what property traders are doing is giving those people the ability to exit away from their problems, but in return, you will make money because you're creating value for the market.
it's not like people sort of think that you're going there, and look, you might get a really good one every now and then, and you make a really good profit on. But most of the time, the margins are they're pretty modest, really. By the time you take your GST and your tax and everything out,
and your time and your expertise.
And your time and expertise. I mean, it's I've never gone and on all of the trade deals I've done, I've never gone and made any margin on any of the renovation or any of those things. It's been solely in a joint venture situation on the profit. And so when you have losses, you lose money, plus you lose all the time that you've put into the project. Now, it doesn't mean that they're like I said, 11 deals out of 330 odd is not a bad loss rate, but there's been plenty of those deals over the years that have been small margin, where you might have made
$5,000,
$2,000, like $6,000
profit share.
Yeah, and it's just like a complete waste of time.
Yeah, and you take the lessons, and hopefully you update your investment criteria for the next deal.
Well, that's why I started getting into the bigger stuff, because I was just like, well, I'm spending all this time to make $50,000, and if it goes wrong, you make $5,000. If I go and do this bigger project, and let's say there's a $300,000 or $400,000 margin, well, let's say the market drops by 20% like it did.
Yeah, so my understanding of property trading, if you're going to get into it in a big way and you can't find capital partners yet, is you've got to do enough deals that you're building up your equity stack that you can do those bigger deals. And so it's chicken and egg situation. You need your $500K to $1 million of cash to be able to do those big renovations, those big property trades with enough equity that you can finance the rest. And then by the time you get to that, that's probably when you can get the capital partners in, the JV partners in anyway. And so sometimes the only way to get around having success in property trading is to do the deals that you end up making the 20, 30 grand on, right?
You have to start somewhere.
Yeah.
And so I caught up with a young guy the other day, and he's just trying to figure it out. Like, he's got zero money. He's out there he's got nothing. Like, this guy's got nothing, which is cool. Because he's out there just doing it, trying to get stuff under contract and then and sell them to people.
Wholesale, yeah.
I said to him, look, mate, those margins. He showed me some of these deals he had under contract. I said, mate, there's not enough margin in that, man. Like, you're thinking, because of your scarcity mentality, you're thinking that $100,000 under value is a good deal. I mean, that's not a good deal, because that house probably needs $120,000 of renovation costs. So where's the upside?
Yeah, and anyone that's going to be looking at it seriously is going to be considering the tax and the time and all those things. So getting a property under contract for $100,000 less is actually not that hard.
No.
And it's great if you're getting started and if you're looking to invest for yourself, but it's not good enough to pass on to the professionals.
I looked at a deal this morning with a friend of mine, got it under contract for like 1.9 million, really awesome location, can convert it to a boarding house or rent by room type situation. Probably rent each room out for like $280 a week. There's about 12 rooms there in this big house, and he bought it for 1.9. You probably spend $200 or $300 on the reno getting it up to speed, and that thing will probably value at 3.8.
Yeah, it's a good deal.
That's the type of stuff that I want to do.
Yeah.
And that's a marriage split up, just people wanting to get out. They've owned it for a long period of time. They've had huge capital uplift. That's the other thing. People go, oh, you're ripping people off.
Well, it's on the market, I'm guessing.
It's on the market. They want to sell it. And let's say they bought that house for $200,000 or $300,000
5 years
back
ago,
in 1981. And they bought 30 of them, because that's what people did. I've bought people's whole portfolio. I bought 16 houses of one guy, and I got chatting to him over the fence. sense.
Did you do long settlement on that and
I staggered it.
take early?
So I staggered the settlements. I think I did like 4 at a time or whatever. And that's how I did it. I just systematically did that and went through. And so there's people like that. And he bought those houses for like 60 grand.
Yeah, and actually he probably knew he could get a better overall going selling them singularly, but he was probably excited to watch you profit. And
He owned a lot of houses. Like he owned central located, and these were all of his South Auckland ones. And he was happy, man. And he knew that we're going to make a profit. Look, at that point in time, at that phase in the market, we were probably making about 50 grand a house. So it wasn't, but we were doing all the work. They were all run down. They'd been tenanted for a long period of time.
And not only were you doing all the work, you knew what work needed to be done, so you could do it faster and you knew what to do.
Yeah, I forget about all these stories. See, all these things that I've done, you've gone and bought, multiple times gone and bought 4 or 5 houses from one guy. You forget about all these. When you start talking, you start thinking about all this stuff. It's like there's plenty of people out there that, people that are in their 70s or 80s that have owned houses since the 1970s, and they've got this huge capital appreciation, and, they're completely run down. They don't want to deal with it anymore. And they're happy to go and sell them down to someone like me.
It's a perfect example of a deal that I was trying to do last year, buying a business. I met the guy. He said thanks, but no thanks. And then a year later, he called me, said, I'm ready to sell this business to you. I want you to buy it. Because he was 76. The only thing that happened is I basically got the business under contract and then he died. So what he was trying to do is he was trying to pass the business on so his family didn't have to deal with it. But now it's probably a couple of weeks too late. He came to this realization that it's better for me to sort this out now, even if I don't maximize the price. And it's the same with property. People, they know that property, not only is that a way to make money, but it is also a time commitment to own property.
Oh, it's a hell of a commitment, man. Especially when there's floods.
Yeah. Eventually people want to get rid of the time commitment, right? And they sometimes they want to pick who they sell it to, even if it's not the best price.
100%, man. It's like anything. It's just a business. It's just like anything. It's like there's always a willing buyer. There's always a willing seller. There's always going to be people out there in the market that, you see people put posts up. I've seen you guys have put a video up on social media about property or something, and you're always going to get negative commentary. It's like there's going to be positive commentary. We all think differently.
Yeah.
It's not right or wrong.
Well, the thing is, the people that often negatively comment, they are the people that really want to help society, community, and actually what people that want to help forget is, pragmatically speaking, money is the way to help. When you have strong income and lots of money, that is the way that you can move the needle. Now, I saw recently, you got to commend David Latelli, what he's doing with the Butterbean motivation stuff. And he's got a whole fleet of volunteers and people working with him. What you're seeing at the moment is companies that traditionally a lot of people don't like. Those companies make heaps of money and they're giving it to the Butterbean motivation. A perfect example is I saw a big crypto company just gave them 260 grand. And I saw, I think it was Sky City just donated $50,000. Now, these are companies that know what they're up to, might be questioned by a lot of people, but money talks. And so if you focus on making money, you actually can help a lot more people.
Oh, 100%. You can't make it help bugger all people when you've got no money. I mean, I've lived on the poverty line and had no money, and that sucked. I mean, it's not like I'm a serious hitter by any stretch of the imagination. I'm just a normal Kiwi guy, but I'd rather live above the breadline than below it.
So your advice has kind of evolved over the years that getting into property trading, you're not sure you'd do it again, but if you're going to focus on being a property investor that it's going to create wealth for you, you reckon start a business or get yourself into a high income position at a top level. That sounds easy, right?
It's easy to say that now, knowing what I know. But then, when you're a young guy and you're working as a builder, for example, I caught up with the guy yesterday. He's a builder, hard-working guy, 30-something years old, just living week to week, doesn't own a house, smart dude. How
do you reckon this guy is with a spreadsheet?
He's just got no financial acumen.
How were you with numbers and spreadsheets when you first got started?
Oh, I was terrible, man. I left school when I was 16 years old. I killed more brain cells than I grew, over the years with all the habits and all the different things I've done. So, I mean, I'm not my admin won't even let me fill out. My admin team, Roxy, she won't even let me fill out my spreadsheets because I screw it up. So all I do, mate, I don't even need to know that. I just type it out in a text message and send it to her and she puts it in a spreadsheet.
And there's no reason to believe why you can't find somebody to help you out. If you, for example, this builder, what does he know? I'm guessing he knows about costs and timeframes for renovations, and he knows potentially, and if he doesn't already, he could easily learn how to get a property under contract. But what he doesn't know is how to run the costs on a spreadsheet to show profit or loss.
Well, he doesn't believe that he can do that. I asked him what his income was between him and his partner, and he could buy a house right now. Doesn't know. Doesn't have the knowledge. And so that's why you've got to ask people that have been there before. It's so simple for someone like me.
So find a mentor.
Find someone that's
even if it's online.
Yeah.
And to help bridge the skills that you don't have with help from someone else, or just learn.
Well, I don't know anything about any of this stuff.
Well, you've never been a builder.
No, I'm not a builder. I'm nothing. I'm a nobody, really.
But you don't mind picking up the tools, I'm sure.
Yeah, I've tried to, but I mean, most people just, if someone's seen what I built, they'd probably want to pull it straight down. I mean,
Actually,
I'm not a builder.
I got a tactic to pick up a tool, show people that I don't know how to use it, and then people won't let me do it.
Yeah, well, I sort of do that with making coffee.
Yeah.
I was joking around with my wife Emma this morning. I just pretend that I don't know how to make coffee because then she has to make it for me every morning.
Smart, man.
Because I don't want to be a barista, so why would I spend a lot of time learning how to make the perfect coffee? I'd rather have someone else do it.
I'm glad you asked for long black and not anything else, because even though we're just pushing buttons here, I purposely don't learn how to do those types of things because I want to keep focused on what I do want to learn.
Well, that's like you just stick to what you're good at. I'm good at talking and going out there and wheeling and dealing, doing the things I need to do. So you focus on your strengths. Other people have strengths that are far greater than mine, like my business partner Stacey in our property consulting and construction business. He's a construction expert. You know, I'm not the construction expert. I'm more of the entrepreneurial, put the deals together, understand the numbers, that side of things. But he's the expert when it comes to rectifying. So you partner and you work with people that are better than you in certain areas. And so you use other people's strengths. I've got certain strengths. He's got strengths. You've got strengths. So you work to what you're good at.
Oh, partners in a deal is something to be celebrated, I think. As long as you're not working with a partner that's just got all the same skills that you do, that's fine. But it makes sense to have partners that have skills that complement your skills. They're not the same.